Good day to one and all. This is Dr. Sivaraman presenting the Asian Session Live Market Analysis webinar for this particular week, 11th to 15th of November. So today we are on 11th of November. Between 5 and 5:30 GMT, I will try to explain the derived forecast using my statistical algorithm and also the mathematically derived levels, what we could see in this particular week. No. So in my trading system, I use the derived forecast as a guiding factor, then afterwards use the market reading technique in order to fine tune the forecast. And still, I do not want to take any chance or risk in trading, so I use the trading strategy, a simple trading strategy of using the hedging order to limit the risk when the position is taken or when the position is in loss. As soon as we take the position, and once the position makes profit, I keep stop at entry and remove the hedging order or the normal stop. Then try to trail the stop, which is when the position is making profit, and try to exit when they stop cutting the opposite side. If it is a buy and sell trade, then when they rise from the double low to the high and stop cutting the new high, for more than 30 minutes, I try to close the position as a swing trade. So this is how one has to probably use any method for that matter in order to read the market. But ultimately, the trading strategy is vital in order to successfully earn from the market and also to limit the risk and maximize the profit. Coming to the forecast. So let me just briefly recollect what has happened on Friday after the non-farm payroll. So when the non-farm payroll was announced, which was more than expected, and it was a surprise to everyone, and as a result, we have seen that sudden drop in the case of and GBP and an upward spike in the case of the denominator currencies like USD and USD CHF. And the commodity pairs, Canadian dollar also gained, USD CAD also gained, and the Australian dollar also made the loss. So ultimately, we have seen on Friday the USD gaining move in total. Now, what is going to happen next? So when Euro and GBP have dropped, and it might give the impression that there could be a free fall, but if you have noted on Friday, the net change with regard to the fall, they made about 50 to 60 pips. And in the case of GBP, they made about 75 to 100 pips and then started recovering towards the close. So we understand that when the traders turn sellers after the drop, the players are here to support the market and gain the levels and try to give some excuses. So what we need to understand is the data release time is used as a trigger, and the players try to see that the traders become convinced with regard to the fundamental data and try to take the positions, and the players try to absorb all the positions what they do it out of emotions, and later on show a different way of move in the market, giving a different story. So ultimately, this is what very important for us, and it is not that the fundamental is going to drive the market forever. And it will be a knee-jerk reaction on a particular day or a few hours, and later on they could change the market sentiment. And ultimately, you find that once they stop dropping, on Thursday, that after the rate cut in the case of ECB, there was a drop in the case of Euro to 1.33, whereas for non-farm payroll, they did not drop it to that much level, and they just dropped it to 1.3338 level and started gaining it. And also in the case of GBP, they dropped it to 1.59 area, and on Friday they just made a lesser drop and then started gaining the levels. But in the case of USD and USD CHF, they are not made such moves. Instead, they continuously gained the levels. So as I explained that they gain the levels and hold in the case of the denominator currencies, and in the case of numerator currencies, they make the whipsaw moves during first week of the month, and later on they are trying to set the trending move from this week. So this week is the second week of the month, and so they will start the week with the volatile moves, and the upward bias moves are expected during this particular time. And today the market might show lesser volume because it is holiday in US. So there could be a reduction in the volume, and still the market could make the swings. So during that of the Japanese session, Euro and GBP are expected to make the swing and slide move, and then swing and rise move during that of the European session. And again during the US session, swing and slide moves could be seen. That could be the week beginning false move just to touch the Friday low what they have set, and they just visit that particular area in order to buy back what they have sold on Friday. And then you come across, technically it is called as the head and shoulder region and things like that for a reversal. But basically, why such things should happen in a chart, if you ask, then the players drop it big and afterwards forming the new low, then recover and try to hold slightly higher and try to buy in those levels when the traders were selling. But then subsequently, in order to buy around the level up to what they have sold, they revisit the levels and then for the new week, so that the traders will develop a strong bearish feel, or probably they just breach the low what they have set on Friday, and then the traders will certainly come to the conclusion that the market is expected to make further drop, and later on they reverse the market. So ultimately they pretend as if the market is moving in tandem with it of the technicals and fundamentals, and later on they breach it. Then it becomes a surprise. And many of the traders on Friday, they said that market is really crazy. When you are not able to give an explanation with regard to the technicals or fundamentals, then the next alternative word one can use is crazy. So swing and slide moves during the Japanese session today. Swing and gain or rise moves could be seen during European session. And again, a week beginning false move will end up with a swing and slide during the US session. Then tomorrow, they are expected to make a quick rise and then make a slide, then dip during the early part of the European session and then rise, then swing and rise. So probably this could be the nice area to take a buy position when the volume improves, and later on we should be able to see the gains. Then Wednesday, that will be the midweek, and tomorrow, Tuesday, they are expected to make the either way stop ends. So they are expected to make the slide and dip during the late Japanese and the European session. At that time, they could make a downward stop end, and that downward stop end could be the ideal time to take the position, and then they will make an upward stop end, and probably you can exit out of the position and re-enter on Wednesday when they make a dip during start of the Japanese session and then quick rise. Then they are expected to make a swing and slide moves, but after the gains only they are expected to make the slide, so that may not be coming to the same low, and later on swing and rise move is expected during US session. Then Thursday and Friday we could come across swing and rise, dip and rise, swing and quick rise moves. Then 15th Friday, swing and quick rise could be seen from Japanese session, and then it might continue as a small gaining level as the intentional move, and then a small dip and quick rise could be seen during the US session. So this will be the expected market move during the second week. And third week, 18th to 22nd of November, the market is expected to continue with the upward trend. Swing and rise moves are expected. And people might be wondering why I am telling all the time that swing and rise, and the market is expected to gain the levels, even though Euro and GBP has made a drop. And these drops of 300 or 500 pips are nothing but the accumulation strategies of the big players, and they try to use such data release, etc., and trigger the market and induce the traders to commit positions, and later on they are expected to gain the level. And these gaining levels, we see that what we have seen earlier, those levels have not been revisited. So when it has gone to 1.38, from there to drop to 1.33, we find that it is a big fall. But whereas they have been crossing 1.33 and 30, 33 and gone up, and afterwards they have not looked into it. Obviously, the players make the big moves, gain quickly about 500, 600 pips and book profit and drop and buy back again because the volume is very less. And when you see 500 pips spread between the high and the low, their average profit will be about 100 pips for their volume because they have to rise the market as well as drop the market. And in that process, they have to commit a lot of position in the averaging. And in this averaging process, their average profit could be about 50 to 100 pips. And it might look very big for us, about 500 pips. But they do the average. If you take the average buy and the average sell of the big players, it will be hardly about 50 to 100 pips profit. So you have to keep it in mind. And they cannot do all the volume in one day. They have to stagger it and accumulate it during different occasions. And only then they will be able to hold and sell. If they sell all their positions, probably euro could drop to 1.1. But they will not do that in a single day. So obviously they have to book profit periodically and again re-enter in the market and try to gain the levels. But they are expected to continuously gain the level in the market till 2016 and 2017. So I'll be giving the call swing and rise till such time the market is expected to reach the all-time high. Then with regard to the expected market move, expected levels in this particular week, and euro is expected to form the low as 33.50, 33.45 they are shown as the low, and 33.67 is the current high, and they are expected to go up to 36.75, and GBP could make further drop to the 59.50 area, and 60.75 they could reach, but so far they are shown 1.6022. And USDN is expected to gain above 99.75 already. That was the level up to which they have been making the range bound swings, like 97.50 to 99.50. That sort of moves they have been doing it. And now they will keep the 98.75 as a close approximate level around which they will try to accumulate and rise the market or USDN to 102 and above. So 99.23 they have shown so far, and you find in all that narrow range is seen because the players are just making the swings for the traders to commit positions. The USD CHF, and if you see that they came down to 89 area, from there slowly gained to 92, and when euro is reversing going up, they will not drop correspondingly CHF. And that is how we will come across. Even in the case of yen, we have seen it. So they are expected to slowly or consistently gain the levels. In the case of USD CHF, 91.75 could be the low, 92.16 they have shown. They could make a downward stop, and below that, 94.50 could be the high. After reaching 94.50 and 95, you could come across very quick rise in the case of USD CHF. At that time, you can take positions so that it will not test your patience. And in the case of Canadian dollar, 1.0450 could be the low. They have shown so far 1.0472, and it could reach to 1.0675 area this time. And Australian dollar, as I explained, that they make the wide range swings. After gaining about 97.50, they have come to 93 area, 93.50 area. And 93.68 is the low they have shown, and 96.50 could be the high this time. 93.90 so far they have shown it as a high. So slowly they will gain the levels, but whenever you come across even a small drop in the case of euro and GBP, Australian dollar could make further drop, and they will continue to make the wide range swings. Don't expect Australian dollar to make a corresponding gain similar to that of euro and GBP. So far, I have given the expected market moves for this week and also the levels in which the market could trade. So you can refer to it on a daily basis or note down the actual levels of the low and the high and find. And also I will note down those levels here and show it on Thursday how exactly the market has behaved, whether in expected line or just opposite. Now with regard to the market reading, so in the case of Euro, GBP, USD CHF, USD Yen, Canadian dollar and Australian dollar, they are not breached the high or the low. Whatever you come across as the initial high and the low, around 3:30 GMT, still they continue to be here. So they are making a narrow range swing. If you see that spread between the low and the high is less than 40 pips in all. And so traders are very cautious after Friday, and they wanted to know what could be the market sentiment, and they like to know whether the sentiment is going to be changed, or probably people might be waiting. The pullbacks could be sell opportunities and things like that. And even if the market drops, they are afraid to make a buy, because you come across big downward calls are given by various analysts that Euro could go to 1.30 to start with, GBP to go to 1.57 and things like that. So in that continuation, in that particular condition, the traders will be very, very cautious, and it is reflected here. Besides holiday in US, then the traders might be very cautious in committing the positions, because the market may not have adequate volume to show the swings. So this is the condition you come across currently. So as the day proceeds, let us see how exactly they are making the moves in the market. So as far as the market reading is concerned, so we identify the initial lows and the highs when the market is near that of the low, or when they are making a downward stop below that of the low. When they stop cutting the new low, we try to take a buy and then try to keep 30 pips hedging order in order to limit the risk. And once the position makes about 25 pips profit, we keep stop at entry and try to trail the stop in a profit-making position, and also we exit near that of the opposite level. If we take in a buy position near the high or above it, we try to close it. If we take in a sell position near the low or below that of the low, as the going is observed, and we try to book profit. So ultimately, these ranges are very vital, initial lows and the highs, because the players use it as a reference level for their stop ends and also extended move, intentional move, etc. With regard to the market timings, as I explained, now on we'll come across the standard time in the market. 0030 to 7:30 is the Japanese session. 7:30 to 8 will be the gap time. 8 to 14 GMT will be the European session. 14 to 14:30 will be the gap time. 14:30 to 21:30 will be the US session. 21:30 to 0030 will be the gap time before the start of the next day. So try to observe the market in GMT time frame so that you will be able to really understand how they are making the early and the late sessions. They handle the majors, and the mid sessions they handle the crosses. And also they handle only two pairs at a given time. So try to identify those two pairs where the spread becomes more than 40 pips. At the moment, none of the currencies are showing 40 pip spread, and still they are trying to make small moves here, and probably will come across during the late session they could increase the spread between the low and the high. And at that time, we'll be able to identify the two currencies wherein the spread is increased, they are handling. And similarly, if you are watching the crosses, then try to see that they make a spread of 70 pips between the low and the high, then you try to commit the positions. Otherwise, the market might stay wherever you are committed to the position, and it may test your patience. Okay. So I'll come back again on 14th Thursday and give the Asian Session Live Market Analysis webinar. And besides, tomorrow I'll be giving the Tracking the Forex Market together part 1 between 8 and 8:45 GMT, and part 2 between 13 and 35 13:45 GMT. We note down the time. This time, during the start of the European session, I will take the position, and during the close of the European session, I will try to close the position and show how exactly the profit is earned from the other market. So within the session trade, I will try to do it. And also, when the market starts, I will wait for about 15 to 20 minutes and then try to take the positions when they are near the low or near the high. And definitely, I will explain to you how they are expected to make the moves. And accordingly, I'll try to commit the position and show the results there. Then we'll be able to really understand how session-wise trades are very safe, and especially during the early and the late sessions. During the mid-session, they might make subdued moves. So early and the late sessions, if you watch, you'll be able to really appreciate that this trading method works very well for you. Now, let me answer to the questions which are asked here. When do you believe USD will really come back like in 2001? Okay. Now, you know that before 2001, before September 11th of 2001, you know that all other majors were under severe pressure. USD, Euro was trading around 0.78 and GBP was trading around 1.35 and the yen was trading around 134, etc. And Swiss franc was trading around 1.43, etc. Unbelievable levels according to when we see these levels now. And if Gregor wants to know when those levels are going to be seen, and it will take a big cycle, and the cycle probably you and I may not be living. But definitely you will come across such cycle is going to happen probably about another 70 years later. Then what about Euro Yen in this month? Okay, as far as Euro Yen is concerned, okay, it is trading around 132 now, and you know that they are expected to hold. It is showing about 14 pips negative net change. And here you come across Euro and USD are showing negative net change. So that means they are handling the process during the mid-session. And so they are expected to make a brief downward stop in the case of USD yen, because, Euro yen. USD yen is closer to low. Euro is in the middle level, and they're expected to push it downward towards late Japanese session. At that time, you try to take a buy. You should be able to keep stop at entry, then to try to maximize it. And since they are expected to gain more levels in the case of USD yen, and also in the case of Euro during this week, Euro yen is expected to gain more levels. Any other questions so that I can answer to this question? Whenever you are trading in crosses, always keep in mind that they make the contrarian move in the case of the majors. Only then you try to take positions. Otherwise, it will be simply a waste of time. So like this, a push down in the case of Euro with 3 pips negative net change, and USD yen 7 pips downward move. So when they push both the currencies down, you find more downward move in the case of 12 pips in the case of Euro yen. And what they do is they continue to push it down. And probably they already done it to start with, and then they will try to push it closer to this before making a big rise. In the case of GBP yen, also a similar condition is seen. They could make a downward move below that of 158.47, and because it's closer to that, and they will try to hit the stops below that another 50 pips, and then start gaining the levels. Okay. Mohan Kumar, Australian dollar. As I explained, Australian dollar is expected to make the range bound swings, and it could show the range of 93.50 to 96.50, 300 pips swing in this particular week. And after the drop, whenever they are making a downward stop and move, try to commit the positions, and then we'll be able to see the gains in the case of Australian pound. Simply don't commit position when they are in the middle level, then you might lose your patience. Then Lam Shelley. What about Euro GBP? Okay, Euro GBP cross, you know that it was from 85 area they started dropping it, and when you see that they are handling Euro with a negative net change and GBP with neutral, so they are expected to gain more levels in the case of GBP and less level in the case of Euro to start within this week. So obviously Euro GBP cross is expected to come to the 82 area. And after reaching 82 area, they will pretend as if they are going to rise it to 86 or 85 area, similar to last time. Then you will come across, they will just come below that of 82 and come to 78 area. Then what will be the position of USD as price touched 61.8 Fibonacci in 1 month, 1 hour? Okay. Now, as far as USD CHF is concerned, they are making a consolidations here and gain, consolidate. That sort of moves they are doing it in the case of USD CHF because it is relatively less volume when compared to Euro and GBP. And here they are expected to slowly gain the levels. And if you see that USD CHF has gained 9 pips when compared to 2 pips dip in the case of Euro. So slowly they are expected to ascertain the levels, and up to 94.50 there will be a sluggish gain, and afterwards we'll find that USD CHF gains very quickly to 97, 98, etc. And above parity we should be able to see before end of this year. Okay, no more questions. So let me wind up the webinar. If you got any doubt during the part of the anytime during the market hours you come across, you can just, because I'll be posting this or the recording of this particular webinar will be posted in fxstreet.com under the archives webinar, and also it will be, I will just give the link in fxstreet.net, and you can ask questions there. I'll be willing to answer those questions in the event if you come across the market is not moving in tandem with the expectations. So I take this opportunity to thank FX Trade for the facilities given to present the webinar, and I also thank you for your presence here and attending the webinar. I'll come back tomorrow with the market reading for the European session and also the forecast for the European session, and try to take the positions and show how exactly the profit can be earned in the market. So looking forward to see you all during tomorrow's webinar, and let us try to perfect our trading system so that consistently we'll be able to earn from the market. Thank you one and all. Wish you all happy trading. Use it as a guidance and try to use your own discretion in taking trading decisions, and try to see that you master the art of trading. Thank you.